Joining the show now, he is the publisher of the Morgan Report on Precious Metals and author of Get the Skinny on Silver Investing. David Morgan is with us.
Well, hello, David. Welcome to the Real Money Show. We're really big fans, and we're glad to have you here today. How have you been?
Been excellent. Thank you.
Fantastic. Well, I'll get right into the line of questions we have for you today. On the Real Money Show, we've discussed cycles on our show for a long time. We've been doing this on air since 2008 ourselves here in the Toronto market and across Canada and now in the U.S. And gold and silver really, in our eyes, has been very cyclical since the beginning of this bull market back as early as 2000, early 2000s. In your best words, how would you explain the most recent correction of the silver price since 2011, and what factors have played a role in getting us to where we are at this point in time?
Well, if you go back to the previous bull market, which I participated in, really manipulated or not, it's what I would consider to be normal market behavior. And if you look at the previous bull market when gold was freed at the 42.22 an ounce, it went all the way up to about 200, not quite, and it backtracked and fell off to about 100, not quite, and then it moved up from that level back to the 200 level and beyond, and from 200 it went to 850 on the spot market. So it was a big washout. It took a couple years. And when gold was hitting the $200 level, there was euphoria in the market and lots of commentary about how great it was going to do. And when it caved and retraced about 50% of the move, got near the 100 level, you could hardly find a solid gold bull anywhere. So knowing that and watching what took place in 2011, I called the top in silver at the $48 level, and I think I was within just a few days of the exact top. Luck or skill, either one, I don't care. The point is I made that call. And on the way up, and this is in the record, you can go check it, you can listen to the YouTube videos, whatever. I said around the 30 level, especially the 35 level and up, if you have to buy silver and or gold, please don't buy all that you want at this point in time. This market's getting frothy. It's going to extend. It's going parabolic. It is going to top. I just don't know when. And, of course, actually, I guessed when, and I was correct. And a lot of people got in. I mean, there's always more money put into a market as it nears a top than there is at the bottom. I've learned from years, decades of experience that people don't buy bottoms. When emotions are running high, there's a lot of emotion and markets are moving quickly. That's when it draws in the most. And this is typical of the metals markets as well as most other markets. So having said that, when it did peak and started its downward trend or its bear market within a bull secular market, so I still believe we're in a major bull market, I said it would take 2 or 3 years for this to consolidate. Again, manipulated or not, or how the price got there, is a factor, of course, but the price is the price. No one can argue that. So when we got to the level that we saw a lot of support, which was the $26 level for silver and about the $15.50 level for gold, what we saw was that level hold again and again and again. And at one point in time, I saw the data and I put out an alert to my members only by video. I do these videos with the charts, and I said, it's going to break. It's going to go down. If you're worried about this, protect yourself, hedge. And I had a hedge fund manager that actually went net short. Not that I recommended that. I was just telling him what I was doing.
Right.
And, he basically saved him because he had a huge position. And by going net short at the 26 level, when it went down into the 19s and he covered, he's very happy.
Of course he was.
Anyway, yeah. So anyway, I look at it as quote unquote normal market activity. I'm not trying to dissuade the fact that the markets are manipulated. In fact, in my view, almost every market is manipulated. But again, you can't argue the price or the time. We're at a point now where I think the washout is done. We've been going basically sideways in both the markets, particularly silver market. Long bases build a lot of synergy that will come into the market later. So the bigger the base, the longer the base, the bigger the move up. We've been consolidating in this range for about a year and overall 3 years. So I said 2 or 3 years of consolidation, and then we should start back up. So I truly believe, from my work, everything that I do, that the cycles ebb and flow. And the function of a bull market is to kick off or shake off as many bulls as possible. And believe me, as you well know, you're in the business. There's been a lot of bulls that have been shaken out. They either have sold their positions, or they haven't added, or they've decided to get into the stock market or back into real estate or whatever. So there's just, the sentiment is perfect. There's a very few bulls at the bottom, and that's when you should be bullish. And so I think it's, again, quote unquote normal. Going back to just reiterate an important point, the $26 level silver and $15.50 gold, that was definitely a manipulation. The amount of money that was used to sell short, the amount of contracts, to be more accurate, sold was a phenomenal amount relative to the physical supplies of both the metals, and it has to be deliberate. You're not going to sell a massive quantity in a short amount of time unless you want one thing and one thing only, and that's for the price to go down. That's an irrefutable fact. I don't care what anyone says. I'll go in the court of law and state that all day long because it's the truth.
And that's an interesting point because we've talked about it at length here on the show. And those cycles are important because we've seen that base building happen at least 3 other occasions prior to this one. And of course, as you mentioned, the peaks on all 3 of occasions have been higher and higher. So we're extremely excited about where we are. And I do think we've shaken the tree loose of, a lot of sentiment. And we are at a point now where base building is happening. And of course, great opportunities for buyers.
The number to begin investing, 1-877-78-SILVER, and online, therealmoneyshow.com.
Jeremy Wiseman here with our team had a question for you also, David.
Yeah, I just wanted to reiterate actually what you were commenting on, which is, it sounds like what you're saying is a lot of investors, frustrated or not, are looking for answers, coming up with questions. And it sounds to me that when I like what you're saying, I think you're saying that, correct me if I'm wrong, that you're saying, look, this is sort of normal activity. And when the market's low like this, it's going to be tough to catch a bid. But the longer it goes, the more you're setting a base for the next level up. Is that essentially what I was hearing?
No, well said. Yes, it is. And I just want to add one thing about, the manipulation. When the first bull market that I started speaking about took place, William Simon was the Secretary of the Treasury at the time, and it was sort of a wink and a nod kind of thing of how well he had done, wink, wink, with getting gold from the $200 level down to about the $100 level.
Sure.
So, to say, oh, well, it's new, it's fresh, it's only happening now, it's only happening because I'm in the market, the forces are against me. No, if you read The War on Gold and you read the amount of books I've read on gold, it's and silver, but particularly gold, you will see that there's very few times throughout all of recorded history where it wasn't manipulated. So it's nothing new, but it happened before under the administrations that were around during the last bull run, and it's happening again, maybe differently. We've got ETFs and things that didn't exist in the previous bull market. I fully understand that. The point being that the fundamental fact remains, and that is that governments don't like gold,
sure,
for the most part.
Just
to
interrupt you there, David, there was an interesting article by Mark Faber on CNBC this week, on Tuesday in actual fact, about the media doesn't like gold and silver. Any comment on that?
Well, absolutely. I have been on TV a few times, and I was on a particular well-known financial channel, huge viewer audience, and it was when gold had gone through the $1,000 level on the way up. And they were trying to get me to say that gold was in a bubble. And I said, no, gold isn't the bubble. The bubble is in the bond market, the debt markets, and they cut me off. They literally stopped the interview.
We remember that.
Claimed it was a technical difficulty, and I've never been asked back on that financial channel. So if you're willing to speak truth to power, you take your chances. Now, other financial channels actually let you speak your mind. That particular one actually has you submit what you are going to say ahead of time, at least 24 hours ahead. And in my opinion, it gives the spin doctors a 24-hour longer period of time to kind of spin what you're going to say.
Sure.
I had that happen before, but in this particular case, since I'd been interviewed by this channel a few times, I was sort of more mentally prepared to dodge and duck and get my upper cut in and that type of thing. And I was fully prepared, and of course, they didn't want to hear that. No one in the mainstream paper paradigm wants to hear that the paper paradigm has a problem. It isn't. You don't want to have that voice screaming, "The emperor has no clothes," because you might wake up too many people.
It's a topic we discuss here very often, but more recently you've been discussing, I've read quite a bit of analysis and questioning about physical silver demand, and obviously it was up a lot in 2013 as the coin stats would have us show, but ironically in Canada, silver production has dropped significantly in 2014. Now, we're not a significant contributor, obviously, as a country to the overall supply side, but I think that our bankster friends would have us believe that physical silver is very abundant, it's very easy to mine, and it's of little real value.
The number to contact anytime, 1-877-8-SILVER.
What is the real story right now on silver availability? Is it in short supply, and do you see it coming to a crunch in the near future?
Well, the best I can determine, of course, this is very difficult because
sure it is.
Numbers. Some of the numbers you get include like hedging or paper silver, even though they put it in a physical category. But the best I can determine on the silver side is it's not really in that tight a supply currently. But it's such a small market that it can become a tight market almost instantaneously. And the reason I can say that with authority is that the size of the silver market is so pathetically small relative to most other markets, gold as an example. And gold's a small market. So right now, the availability through London seems to be more than adequate. And the other thing, what you said, is almost precisely the way I talk about silver when you're using it as the 70% factor, meaning that about 70% of silver mined is from base metal mining production. In other words, lead, zinc, copper. Even 13% of the silver supply comes as a result of gold mining.
Right.
Only 25% comes as a result of primary silver mines. So the 70%, the base metal miners, really don't care that a fig about the silver price for the most part. And if this is true, if you study their balance sheet, income statement, and their annual reports, and what they'll tell you is that silver is a byproduct to them, and that's a fact, and that they use it as an offset. So in other words, whatever they can get for this silver, they use as an offset against their lead production or the copper production or whatever. So this is a real problem for the silver market because what happens is 70% of the market comes physically from entities that really don't care about the price. But what makes it much, much worse is they take their book, in other words, their production schedule, and they give that to the bullion banks who help them manage their cash flow in the silver realm so that they can use it as an offset on their balance sheet. And what that means is that these derivatives experts take the amount of physical metal and they can divide it up again and again and again, and they use that paper silver, and it's done in the gold market as well, and use it as a delta hedging mechanism, which is just a scheme that basically they put a spread on the price, and if the price goes against them, they just sell more to make sure the price goes where they want it to. Now, no one says that, but that's the way it actually works. And I think people are tired of it. And, of course, the main question I get continuously is, well, I'm not going to get in the market because these guys are doing this and they'll never stop. Yes, they will. The reason that they'll stop is that the paper product doesn't equal physical reality. And, again, coming back, will there be a crunch time for silver, a short supply in the near future? And the answer is no, not in the near future. But in the not too distant future, meaning around the 2016 timeframe, there could absolutely be a scenario for silver in particular, but it could be in gold as well, where you cannot get physical in size. Oh, sure, you can go to your coin dealer and buy some rare coins or maybe get a 100-ounce bar or something like that. But for Central Fund of Canada or BMG Group or PSLV or any of these true holding companies, or the Zurich Continental Bank, as an example, to come in and buy 20 million ounces of silver like they can do now, or 30 million or whatever, that I believe strongly will not happen. And what that will do is that will panic the market. I mean, real panic will set in, and of course, you can't keep a lid on that kind of a truth. So once that gets out, now this is conjecture on my part, it could be wrong, but I really believe this will happen in this bull market. It'll be the first time ever. People will go to the next best thing. Well, what's the next best thing? Is it an ETF? Not really. The next best thing is a mining company. So this is why I believe still strongly that the best days are ahead of us, but that's going to be a very difficult market because it's going to be panic and fear buying, and the price is going to go up and up and up. I mean, what we saw going into, the 2011 timeframe from, January through the end of April, where the price of silver just went up and up and up and up. That's a prelude to what's going to happen the next time, because that's just basically a warm-up. As exuberant as that market became, and remember, they had to raise the margin requirements 4 or 5 times to quell the market. That's nothing, in my view, compared to what's going to do the next time. But again, I'm not looking for that type of a build until probably the 2016 timeframe.
Is it possible, based on that answer, David, is it possible that the Eastern countries will contribute in terms of total demand to the point that the Western countries cannot control that mechanism anymore?
Yes, and it could, change the timeline considerably. I mean, there is the possibility that, it could happen day after tomorrow. I really doubt that. The Chinese particularly, and Asians in general, take a long-term view, similar to like the Native American Indians, that they look out like 4 or 5 generations. So they are very smart about how they accumulate wealth, and they use the accumulation pattern, meaning they buy just enough in the market to not make the price go up if they can, until they have actually taken so much physical that the price has to come up because there's just less and less available. So they're mining everything that they can, gold-wise and silver-wise. It all stays within the country. And then they're out in the market buying gold, as we all know, in rather generous proportions. So, but they want to do it in a manner as I outlined. However, with all this going on in the geopolitical front, with all these wars and tensions, et cetera, it's a possibility, and I wouldn't rule it out, that some black swan event took place and all of a sudden something took off in the gold or silver markets, or both, that you basically couldn't stop, and it started to run. I can't rule that out, but I doubt it, and I think the status quo is going to be sideways markets for another couple months, maybe through the summer. We're already starting to see them build. Silver's up, I think, 70 cents last time I checked today, which is a nice move.
It is a nice move.
Kind of move. I think the low's in. I'm on record in several shows, and of course for my paid members, that the low was the 23rd of June, 2013, so roughly a year ago at the 1817 intraday low. So I'm very optimistic longer term, and I don't think it's going to be that much longer. Again, looking 3 years out, 5 at the most, I think we'll be very happy being precious metals investors throughout the sector, not only the physical market, which I stress, especially to begin with, but also in the, what I consider to be the best derivatives, which are top-tier, cash-rich, unhedged mining companies.
Right.
We got to take a short break. We'll continue with David Morgan in just a minute. The number to start investing, 1-877-8-SILVER, and therealmoneyshow.com. And more of The Real Money Show. The number is 1-877-8-SILVER, therealmoneyshow.com. Joined once again, back with us, David Morgan, the publisher of the Morgan Report and the author of Get the Skinny on Silver Investing.
Yeah, David, at Guildhall, we only sell physical gold, silver, platinum, and palladium. We also store in a very secure, safe depository. How would you buy or recommend to buy gold and silver, platinum, and palladium?
In physical form.
That's a great question, and I'll just be totally honest. There's no reason not to be. It depends on the individual. Some people of modest means are best to basically just stack their silver, a coin at a time, or 10, or a roll at a time, or whatever.
Sure.
But someone of, decent means, and, we're talking size here, I think is best off by buying to somebody such as yourselves that can go, monitor it or whatever, and store it in a secure location and that type of thing. And what I actually recommend is to have it in probably 3 locations, preferably at least one outside of your main jurisdiction. So for an example, someone that was living in, let's say, Europe, to have some in Canada, some and maybe 2 other places. Both of those could be in Europe as an example. But it depends on the individual. I mean, I've gotten consultation calls from people of extreme means that have bought huge quantities and asked, really, the question was, David, I trust you. I want to buy this amount. I don't want to see it. I don't want to touch it. I want to know it's there. I want to know I can get it out if I want to. Who do you recommend? So in those kind of cases, I do what I just outlined. I would recommend, I don't think you should have it all in one place. If you are thinking like I'm thinking, you might have it in another jurisdiction, and then I would set it up with, 2 or 3 different depositories that I know and trust. So that's probably a long answer, but that's the best answer I can give you.
Well, it's a good answer. I mean, what are your thoughts on this? We believe in using title and serial numbers, which is something a lot of our counterparts don't offer. But what are your thoughts when it comes to that? Assuming somebody like yourself recommends somebody like us or somebody else recommends us, do you think it's an essential part of the equation to have those serial numbers of the bars and things of that nature?
Yes, I think, I've done several interviews and I've gotten guests on our Mastermind series for our paid members. And we've explained, the storage conundrum. And it's really not well understood, even unless you're really, really detailed. And, we prefer segregated storage with serial numbers. I mean, one of the places that I store is totally segregated. I mean, the gold Krugerrand that my 3-year-old daughter put a scratch in is the exact Krugerrand I'll get back. As an example, that's sort of a metaphor. She didn't scratch it, but what I'm saying
I understand.
is that the exact metal that is mine is the exact metal I'll get back out. I think that's really important. But a lot of people, it's funny. They'll spit, the old pound wise or pound wise was penny wise and pound foolish. There we go. And they do. They'll buy, the best price and get the cheapest storage, not realizing that, what does unallocated mean? And they think that it's a big entity, it's a big bank, it's a well-known name, and therefore they're safe. And in some cases, that's anything but true. You really want to be sure. And, when you're putting that kind of money or any kind of money, I don't care if it's your very modest means, you want to own what you bought. And it's funny, the, penny wise, pound foolish, they'll put in, thousands or hundreds of thousands of dollars, in fact, sometimes above that, into a situation. And, I want to just harp on this a bit longer. I know, a fair amount of fund managers, and, most of them, in my view, are the worst, because what they'll do is buy, millions upon millions of dollars worth of metal, but how do they do it? Well, they buy it to the SLV or the GLD.
Right.
And why do they do it that way? Well, because it's a mouse click, and they're dealing in those kind of numbers, and they need the liquidity, and they don't want to store it, and it's cumbersome, and it's all those things. But is it really a hedge fund if what you're doing is playing a paper paradigm that, when the electrical power goes out for 2 days, you can't get it? I mean, it's not my preferred method. Now, I have nothing wrong against free markets and people deciding that's what they want to do, but what I stress is if you're going to play in that paper paradigm, make certain that your foundational investment in metals is metal, that you can touch it, and that's it. If you don't have that, then you don't understand what precious metals are all about. I mean, I'm very strong about that point.
It's a good point, and it's one that we reiterate on a weekly basis, and we've migrated to this particular method with title and serial number now for a number of reasons, but we use 3 facilities worldwide, so it's nice to see somebody else kind of bringing that to the forefront.
The number to contact anytime, 1-877-8-SILVER.
One of the more common themes we've been discussing lately on the show is the relationship of the U.S. dollar to the price of gold, and of course there is certainly an historical relationship that we have seen take place during bull markets in particular. But as we're sitting here taping the show today, with silver up 84 cents, the U.S. dollar is slightly weak in a number of currencies today. What is that relationship, and how is it being impacted currently with the threat of other countries moving away from U.S. dollar reserves?
Well, there's a lot that can be said. One is some of my contemporaries have a chart. I think Ian McAvity's one, and he'll take a gold chart and show that, and then he'll take a dollar chart, and then he'll invert it with his slideshow and show you that they're inversely related, which is true somewhat. I don't agree totally with Ian, and I like him a great deal, and he's a great technician and a great person. But it's more complicated than just a dollar. First of all, I think the bigger, far more important question is really what is the relationship to fiat currencies in general? And that is that there has never been in the history of mankind any fiat currency that hasn't failed. So whether you're talking about golden price of yen or golden price of Canadian dollar or the U.S. dollar or the Australian dollar or what have you, the real fundamental question is what survives and what doesn't. And there are people out there that will advocate that the deflationary depression will take the U.S. dollar to new highs. And I disagree totally, because it would be the first time in recorded history that paper trumps gold. That has never happened, and it won't happen. And here's why it won't happen. Jim Pobava, who runs the Financial Sense News Hour, and a good friend, and I used to be on the show fairly regularly, but anyway, I have been on recently, did a great study on collapse of currencies. And what he determined after basically a summer of study is that there has never been a time where paper has trumped gold when you've been on a pure fiat system. So if you look back into the 30s depression, really gold was the money, even though Roosevelt restricted gold ownership and you couldn't use it. He confiscated the gold, put it in the treasury to back the dollar internationally.
Right.
But not so the point I'm making is if you don't have a gold, if you are not on a gold standard of some type and you have a currency crisis, the currency crisis is going to take the paper away, and what's going to left standing is what stood as money for the test of time for thousands of years. That's gold and silver. So that's my absolute. I don't think there's any way out of that, regardless of the deflationary arguments. Not to say that these currencies don't ebb and flow. I call it the vestige of hope for the bankers, because if they can trick the majority into thinking that one currency is better than another, they'll stay in the paper paradigm far longer than they probably should. But they all fluctuate against each other, but in reality, the whole bathtub water line is going down, down, down against gold on a long-term basis.
Well, it's an interesting take, and it's something that we share in terms of our opinions on that particular matter.
The number to begin investing, 1-877-8-SILVER, and online, therealmoneyshow.com.
David, it has been an absolute pleasure to have some time to spend with you today. And again, we'd love to have you back in the near future. Can you tell us how our listeners and anybody that's listening to the show for the first time get in contact with David Morgan and use your services?
Absolutely. The easiest way is it's a web-based business, and just go to themorganreport.com. I do specialize in precious metals with an emphasis on silver, but we look across the resource sector, and there's like 12 special reports that we put together over the last several years that will help a beginner, intermediate, or advanced investor that comes with a subscription. It is a 30-day guaranteed price point, money-back guarantee. So, if you get in there, very few that subscribe want out, but it happens, and we're happy to do that. Sometimes it's, over somebody's sophistication level. If you're a precious metals investor, you're usually an investor of some type before you gravitate to the metals, because it takes an understanding of monetary theory and what happens in monetary history, and very few people are really acquainted with that. It usually takes self-study. Having said all that, our record is as good as anyone's. It's my understanding, looking at everyone else's work, that we have picked more mines that are more junior situations that have actually become mines than anybody else in the industry. Are there those opportunities left? Quite frankly, no. There's really very few exploration situations that we like anymore. So we've always stressed in the Morgan Report, which is top-tier, cash-rich, unhedged mining companies as big money going into big companies. You're not going to get instantly rich. You're not going to get the 10 baggers, but you're going to preserve your capital and grow it over time. And some of these companies just keep compounding. They're very, very good companies. We like the royalty companies for a variety of reasons. We'll explain that. And then we go into the mid-tier where they have a higher growth profile, but they have a little more risk. And then we love to speculate, but we do it in a manner that is prudent with what the word means. You bet a little to win a lot. You don't bet the farm on some rank speculation. That's stupidity. We don't do that. So we try to do our absolute best, and it's one of the paradoxes in life. It's self-serving from the aspect that we do a lot of research for what we recommend, but we also want to share that with others. So while we'll help, our research helps us because we are in the market. It also helps you because you get the benefit of our hard work to help you make your own decisions in this, what I think, crucial area of investing, the precious metals.
Excellent, David. I appreciate your time very much. We're thankful that you could spend it with us. We look forward to speaking with you soon. Thanks again, David.
My pleasure.
Take care.
And thank you to David Morgan for joining us here on The Real Money Show. We'll take a break. The number is 1-877-8-SILVER, therealmoneyshow.com. Natural, fancy colored diamonds. That's what we'll cover next.